Good morning, everyone. Welcome to our weekly trader interview of Wall Street Multimedia and Move On. Today, we are honored to invite Todd Horwitz, trader of CME Group and also author and founder of AverageJoeOptions.com, to analyze recent market movements with us. Hi, Todd. How are you? Since OPEC's decision to maintain the ceiling of its production last Thursday, both Brent and U.S. crude oil futures price have tumbled to their 5-year low, which are below $70 per barrel. So what's your expectations on oil's lowest price? And if oil price keeps falling, which one has a greater impact on U.S. and global economy, the benefits or the risks?
You know, I don't think it was any surprise that OPEC did not choose to cut production. In fact, I think there's still an outside chance that they will increase production. By increasing production, they put the squeeze on Russia, they put the squeeze on ISIS, and they put the squeeze on the U.S. frackers. So they want prices lower. They're making plenty of money at the current levels, and right now trading at about $65 a barrel. I would not be surprised to see us go back into the 50s. I would look for one bounce up to 70, but again, I look for us to continue to work our way lower. Economic impact, everybody believes that this is like a tax cut for the Americans. I think this is showing a slowing economy globe-wide, and I think it actually creates more of an issue, in my opinion, and will decrease the chance of inflation, which is what the Fed is waiting for to raise interest rates.
Is there any hidden relationship between oil prices downturn as a commodity and a stronger dollar?
Well, I think anytime you see commodities downturn, there is a relationship to the dollar. But again, the dollar was stronger and starting to gain strength when oil was 107. Oil is more of a fear-driven product and a supply-demand product, which is then benchmarked and priced against the dollar. So part of the sell-off has to do with the dollar, but I think more of it has to do with just an oversupply and lack of demand.
I actually have a simple basic question. Since the massive export of U.S. crude oil has been banned for over 40 years, how could U.S. own oil production affect global oil prices?
You know, I think that, yes, we have dragged down import demand because of our over excess supply of oil here. And the chance that we could become an exporter would also push prices down. You know, it's a much more competitive field now when we look at the overall markets. So now that we are self-sustaining and have enough oil in this country for at least the next 100 years, that will certainly have an overall effect on the prices.
So what's the support price for gold so far?
You know, gold, there really is no support. We are in a solid downtrend. Now, I would certainly look at the, 1100 level as a spot where we could stop going down. And maybe, the overnight low Sunday night into Monday morning on the failed Swiss vote might have been the low, which is about 1140. There's a lot of reasons to believe that, there is a spot for gold. But again, now you go back to the stronger dollar and the lack of money that would say that gold could continue to lower. But I would say somewhere around 1100 would be a pretty good level.
What news should we pay close attention to this week and why?
Well, I think the first thing you got is the Fed beige book, which in my opinion is really not big news, but they'll make a big story about it because it'll help decide what the Fed is going to do. But I think the biggest number of the week is going to be the jobs number on Friday. And that will determine whether or not the Fed's going to do something. Now, I believe the Fed will do nothing as usual. They will sit and hide in the corner by doing nothing because they don't really know what to do here. But when you look at it, if we have another strong month and if you call, a lot more service jobs strong, then, we will see some action. But I expect jobs to be good, but I do not expect them to be the right type of jobs which would spark the economy.
Thanks, Todd. And also thank you for watching this week's trader interview of Wall Street Multimedia. See you next week.